We are looking live at the Nasdaq from last week. This is a daily chart. Thank you for watching my weekly review. I'm going to get to weekly charts, but I just wanted to mention that the environment is everything, and people who try to make money day trading or swing trading, it's very difficult when the market's working against you, and making money in the market's not a linear process. What I like to do, I can only speak for myself, is when it gets in a trend like this, I like to step on the gas 100% or margin or whatever, and try to make the most I can during an uptrend. And then when we get into these three legs down on a pullback, then you want to lighten up and be 0 to 10%. I always want to have something in the want to have something invested in the market, but this is when you're not going to make a ton of money because then Mr. Market's working against you. And it's been very difficult since July 19th. So last week we had a reversal, and then follow-through day on, I forget what day, I think it was Tuesday. Was it Halloween? 1, 2, 3, 4, day 4, which is November 1. So they turn the calendar to November. We get the follow-through day. Then we get essentially 3 in a row here. 3 follow-through days in a row with the Nasdaq going up 1.64%, 1.78%, and then on Friday 1.38%. The volume on Friday was a little lighter, just a tick lighter than the volume on Thursday, but it was still above average volume. So like I said, this is a weekly report, and so I'm going to go to the weekly, and you could just see it pull back to this 40-week line, and then found support and moved higher. I've shown some historical charts that I've done some work on. That's for the folks at mcstockcharts.com. That looks like a prior period. The market changes names and stocks, but the patterns remain the same. So I think I've identified some similar patterns in prior. As we emerge from a bear market, I hate putting labels on things. This is a downtrend, this is an uptrend. A pullback within the uptrend, I think, is what we just experienced. If I go to the daily, this peak to trough here was 12%, which is kind of what, we'd call a garden variety type of pullback. And then the ramp higher, of course, was, some short covering, but definitely some institutional support now. So that's what you look for when you want to, ride one of these trends. You want some institutional support. So anyway, that's it for the Nasdaq. I have a lot of stuff to cover today. I'm not going to get to it all, but some of the other indexes are looking better. If I could type in the right ticker symbol, we can get to the Dow Jones. This is above the 50, like the Nasdaq. I should have pointed out the Nasdaq is 0.4% above its 50 now, which is helpful. The Dow Jones is a 0.5%, so just a tick better than the Nasdaq. I mean, it's only 30 stocks, so it's not really one that I pay attention to, but they are well-capitalized stocks, and will probably do better in a downturn. So this is the S&P 500, which is 0.2% above the 50. And the last one that I'm going to show today is the Russell, which is below the 50, but really ramping hard. And so this one is 0.9%, almost 1% below this, downtrending 50. But I believe that the rates have a lot to do. There's a correlation between this really wild volatility in the rates and the growth index, the growthier, more risk index, which is the Russell 2000. So as long as this keeps coming down, our growth stock should be doing better. Anyway, that's enough for the indexes. I like to talk stocks. And one stock, which is the largest stock for now, although the way Microsoft's moving, I might pass it. They reported a pretty black quarter. Apple is just kind of like one of those long-term, I shouldn't call it a cult stock, but people really like Apple products, and have held on to the stock for a long time. Of course, Warren Buffett owns it. They have a massive stock buyback program, institutions like it, and the indexes, it's in every index. So Apple is going to be okay. It traded up to its 50 on Friday, had a real negative response to that earnings report on Thursday afternoon, but only finished, 0.5% down. So Apple looks pretty good. Like I said, Microsoft is one that's just nipping at Apple's heels here. And if you believe that this new uptrend is based on artificial intelligence, you got to figure the stocks that are going to benefit from artificial intelligence will perform better, during an uptrend. This is Microsoft. I did, full disclosure, bought this one on the follow through day. You had to buy something, right? That's the rule. And it just broke above that 340 level. So I bought a full position there, and we'll just see how it does. Obviously, with the Nasdaq being up 6% last week, Microsoft's, it was up 6.97%. So it's going to trade pretty much with the index. You can see, though, this is one thing that attracted me to this stock. It's just consolidating within this base on the weekly chart. So, it's getting some of these blue volume bars. So there's some institutions coming in supporting Microsoft. Google's another one. They didn't have a real good response to their earnings report, and it's sliced its moving averages. I got to go back to the daily on that. Yeah, that's a nice vertical breakdown right there, a violation, but it has rebounded after the 3-day rule, right? 3 days of selling, then it rebounds and starts coming back through. It also helps that the Nasdaq was up 6% last week. This was up, nearly 6%. So, Google, it's going to be okay. They should benefit from the artificial intelligence theme as well. This is Meta Platforms, up 6%. They reported the week before with Google. Once again, had a negative response, shook out below the, come on, get with it here, Marty. It shook out below the prior low here, this low of 286. It didn't take out the 274, it took out this 286 here. So you could kind of say this is the pattern here, and then ripped right through its 50. I had this on the watch list because I think it's a buy through that, through 312 area. We'll see how Meta performs. Obviously, if the market's going up, Meta's going to do fine. Amazon had a real nice response to its report. And you could just see on the daily, just consolidating in a base here. Got to show the weekly charts. It's a weekly review. And there you see the 5-week consolidation followed by a 7 weeks. So that's essentially like 12 weeks of consolidating. Amazon should do well heading into the Christmas season. Tesla is, I got to go through the Mag 7 because they're the biggest stocks, the most popular ones everybody talks about, and Tesla's having trouble at that 200. So it sliced its 50, sliced its 200, and then got pushed down at the 200. And right now it's just a tick above the 200. So still in no man's land, still struggling. NVDA, everybody talks about the head and shoulders pattern, but now we see a double bottom there, pattern picking that up, and it rallied through the 50 on Friday. They have earnings coming up on the 21st, and that's going to tell the tale here. So if they have blowout earnings like they did last time, probably have a little better response. I know some people, give up on this and said sell NVIDIA, but I wouldn't give up on this. If there's going to be an uptrend with artificial intelligence as the theme, NVIDIA is going to be a big player in that. Anyway, I want to get to the earnings gaps because it's definitely a phenomenon that I like to take advantage of, because it's identifying strength, and when you have earnings that are better than expected, then institutions change their models, and that's why you see upgrades with higher price targets, and they want to buy those stocks, now, and as opposed to later when, if they're going to continue this earnings increase or upside surprises, then it should be higher prices. So this one is DraftKings up 16% on 320% above average daily volume. I can't, I'm just going to go through a few of these. I can't get to all of them. This is Palantir. This is the one I like out of all of them because it's a weekly review. So I'll go to the weekly chart. How about this? It's still in consolidation. But yeah, as I point here, I got a pointer here. This thing's got a gazillion shares. So it takes a lot of demand to move all that supply. And this thing traded sideways, even to down on lighter volume last week. Bam. 25% move with big volume. So I believe with this earnings surprise, upside earnings surprise, triple digit earnings growth, sales growth, that the big institutions are going to be buying this one. They'll be back, like Arnold, they'll be back. So Palantir looks good to me. TGTX, this is one that I've got to mention. Gap higher, this has been, it was free falling, like Tom Petty says, for a long time. It had this big run up, big short squeeze, and then the CEO was bragging about how much sales they had, and they disappointed. It sold off, and just continually went lower. Heavy short interest in this thing, but I believe that this 1140 is an area of interest. And if you just do the old Darvis box here, that's up $12 on that high, and it's just forming this little consolidation. I would say 1140. I kind of like it right there. And as you can see, as it sold off the last time, the low was so there's a gap there at 1956, and the following day the high was $12. So I would like to see it get above that $12 level and get into this gap area here and close that gap at 1956. But we're just going to have to wait and see on that. Pinterest, another one that gapped higher on an earnings beat. There's a 19% move with 400 percent above average daily volume, so that one looks good. Shopify, one of these are the 2020 darlings here. Shopify, double bottom base, ramped higher, 22% on 281% above average daily volume, so that one looks good as well. Cybersecurity stock, QLYS, this is Friday, okay, breaks out of this little base. It's a weekly report, Marty, you got to go to the weekly. You can see this big cup with handle pattern. That's, that choppiness is just really just a handle. After this big base, right? Big base comes up, makes his handle, and then boom, rips higher on an earnings report with, way above average daily volume. Yeah, moved 12% with above average daily volume. So that's something that I'm watching as well. I guess I could go back to some of these retailers that I like. Deckers broke out the week before with massive volume. Another one that I like retail. I'm a sucker for retail. This one went up nearly 20% on massive volume, as you can see. And Abercrombie and Fitch has been a serial gapper here. There's a gap back in May, 31%. It gapped in August, 23%, and they're due to report November 21st. So anyway, I'm going to move on from the gappers and just get to some of the relative strength stocks that I like, stocks that I've owned, stocks that have been on my ready list. And they're in the oil and gas space. A lot of them, oil and gas has been strong. This is a weekly report, so I'm going to go to the weekly chart. Should always defer to the weekly chart, take a step back. As Phil Lesh likes to say, you can see this base on base pattern, cup with handle, and now it's moving out of this base area with volume. I believe, yeah, they have earnings due on the 7th, which is what, Tuesday? But I like this pattern here, and yeah, full disclosure, I own this stock, so I like it. That's why I own it, because I like it, or maybe I like it because I own it. TK Tankers, another one. This is oil and gas transportation pipeline stocks that I'm going through right now with International Seaways and TK, and you can see this just recently broke out of that long consolidation period. The bigger the base, the higher in space. So I like that one as well, though I do not own that one. FRO, this is Frontline, oil and gas transportation. You can see the consolidation, the move higher. And on the daily, you can see that that's, chasing it now. You chase, and then it pulls back to the 21, and you're down 4 or 5%, you get shaken out. So I would just kind of watch that one. LPG was on our ready list, and I didn't buy it. I was lagging, but you can see this consolidation here and just ramped higher. Nice 20% move last week. The oil and gas transportation pipeline stocks are very strong. They've already reported earnings. I want to go to the field services and the equipment stock. Not that I want to own them or buy them, but just show the relative strength. This is Tidewater. They have earnings on Monday, so beware of that. It's just trending higher, trending nicely. Weatherford is another one in the equipment space that has consolidated in a base. I think it got upgraded on Thursday or Friday, but you can see these big blue volume bars. So Weatherford, yeah, that looks good as well. Only a 6-week base there, but I think it's going to get challenged at that 100 level. We'll see. They've already reported earnings as well. LBRT is another one. Liberty Energy. I got to go to the weekly chart. And you can see this, long period of consolidation here. It hasn't done anything in a long, long time, and now it's just kind of breaking out from that level. Big consolidation. Like I said, the bigger the base, the higher in space. You could see the RS line pointing due north. That is a strong stock. Anyway, I'm going to move on from oil and gas, go to the drugs, because I like drugs. Stocks, that is, don't do drugs. This is Novo Nordisk, just trading sideways. They, they reported strong earnings and gapped up and just pulled back to the 21 on Friday, found support there. Just tremendous earnings and sales growth from this company, just ramping every quarter. I listened to the conference call and they just said they're going to manufacture more drugs because there's just huge demand. They don't want to subscribe any new patients unless they have enough medicine for them, and all the questions were about the weight loss and diabetes drugs, Wegovy and Ozempic, but they have a bigger pipeline, and but everybody's focused on the weight loss drugs, and Novo looks good. I would say above 100. I kind of like it there, but it's just consolidating in the base. Lilly, same thing. The focus is on the weight loss. Not sure, Lilly has a huge pipeline, been a big winner for a long time. They had strong sales growth. I don't know what happened with the earnings. This looks like a one-time glitch deal. I didn't listen to their conference call or pay much attention to Lilly, even though I do. I bought both those stocks, Lilly and Novo Nordisk. This one's smaller because I like Novo better. Anyway, I'm going to move on from the drugs. I'm going to go to the retail. I said I'm a sucker for retail. American Eagle Outfitters, just consolidating in this big cup with handle base here. And this cup with handle actually acts as a, kind of just a handle, as it makes this cup with handle pattern and pulls back to the moving averages, now rips higher. If you look at it on the daily chart, it's just making new highs, higher highs. We like higher highs. I like higher highs. 1753, 1841 made a higher high last week. I don't know, around $19. But American Eagle, they report on the 21st. So I know the theme is the consumer is dead, but there's a lot of retail stocks doing well, and Christmas is coming up. I mentioned Abercrombie and Fitch earlier, so I'm not going to go through that one. Sorry. Lululemon is another one. They have earnings coming up on December 12th, but this one's just consolidating. And on the daily chart, I like this little, for a trade here, this little pinching pattern that it showed. And then, of course, like everything else went higher, it's like shooting fish in a barrel last week with everything going higher. So still that 406 area is an area of interest. If it could sustain higher prices above 420 as well. So Lulu looks good to me. GIII, nobody talks about this stock. GIII Apparel Group. You can see the group is not strong at all. 131 apparel clothing, allegedly is dead, but this one, if I go to the weekly chart, you can see, consolidation ramps higher, more consolidation ramping higher. This stock has strength. They have a lot of different brands that they sell. But anyway, apparel's not dead, folks. I'm going to move on to software because that's sexy. Everybody loves the software and semiconductors. Trying not to cover too much of them because they're really not doing a whole lot in comparison to some of the other groups. This is ServiceNow. You can see a ramp off the bottom right through its 50. And it's still consolidating in a base. Got a little extended here. This is up nearly 10% last week. And it's, I think it's about 9% or 8% above its 10 EMA, 5%. So let those moving averages catch up, trade sideways around 600. ServiceNow looks pretty good to me. Spotify is another one, and the music, computer, software education, just consolidating in a base here, trading sideways, kind of like that type of action, real quiet, sideways, inside week last week, even though it was up 6%. that looks good to me. MSTR, this one trades with Bitcoin. And Bitcoin's been ramping recently, but still consolidating within a base. I kind of like this pattern. I don't trade Bitcoin, but if there'd be one way, I guess, to trade Bitcoin is to buy MicroStrategy. It has exposure to it. VRNS is a computer database. You can see the long consolidation here in that stage 1 base, and this little flat base is acting just kind of like a handle here before it breaks out. Last week here, making new highs, so I kind of like that one as well. The home builders, Pulte Homes, obviously with the rates going lower. I did show that, didn't I? I think I did. Anyway, the rates are going lower, and it's causing it's having an effect, obviously on the home builders. Lower interest rates, corresponds to more home buying. I guess that's the theory, but this thing ramped off its lows. You could say this is a hard shake here, rallied up, then that last shake, and then through the 50. That's that looks real nice to me. The other one is DHI. This is the largest one in the home builder group, and man, that was just not a shake at all. It was just a steady downturn, like the indexes, right? I mean, the index, like I said, the Nasdaq was down 12% last week. It ramped 6%, and DR Horton was right there with it, up 16%. How about that? Nice move with some volume there. And Lennar, pretty much same thing. Home builders kind of trade together. Builder, it had a huge sell-off. It was a big winner for a long time. Had to correct, and this got this little double bottom pattern, and now ramped higher through its 50 last week. So something to make note of. The short-term moving averages are ramping through the longer term. I didn't buy this one, but it definitely is intriguing. Anyway, that's it for me this week. No, I lied. I want to show a couple stocks that I like. There's your double bottom and Arista Networks. Didn't buy it. Full disclosure, Crowd I did buy, and this one is bought it back. Gosh, right before this ramp here, like 165 or something. Then it pulled back, and then last week had a nice week. This is a weekly review, up almost 9%, showing strength. There's some real weakness in the cybersecurity stocks. CrowdStrike is taking the lead, and Palo Alto is doing okay as well, but just not as strong as you compare the two stocks, because Palo Alto Networks is just right at the 50, 0.2% above the 50, and CrowdStrike is 10% above the 50. So definitely CrowdStrike, the stronger stock right now. Like I said, that's it, except for I lied. I have one last thing. I'm an educator, and I like education. And I'm really surprised to see these consumer services education stocks just ramping. Does my heart good. Yeah, good for the education stocks. You can see long consolidation. This one's just trending higher along with its moving averages. That's EDU. AGTE is another one. I got to put the ticker symbol in there, right? ATGE. Adtalem Global Education. I guess it's online. I don't know much about it. Kind of thin, 400,000 shares a day, but you can see this massive consolidation in the breakout here. Long consolidation. The last 2 weeks just been ramping hard. 15% 2 weeks ago, 10.5% last week. So congrats to the longs there. PRDO is another one. Oh, wow. What happened on Friday? Came down to the 50. You could see this long trend, and then all of a sudden, whoops, with volume. Maybe that's an earnings play. I don't know. But yeah, pulled back to this 50 there after this cup shape pattern. Nice ramp. Pull back to the 50 on Friday. Maybe that's an opportunity. I have to look more into that stock. And the last one is LRN. What a great ticker symbol for learning education stock. Provides curriculum to many students in 30 states, including District of Columbia. I'm more interested in the chart where you see this breakout. One of the power earnings gappers, and it was up 18% and just trending higher. You can see on the weekly, Boom. Nice consolidation, tight area, 4 weeks tight, ramp higher. That's a thing of beauty. Anyway, that's it for me. Remember, turn your clocks back. You fall back this week, unless you live in Arizona and I believe Indiana. Anyway, that's it for me. Thanks for watching, and have a great weekend. We'll see you on Monday.